Welcome to Illuminati Silver. We tell you the truth about silver. Silver prices are going to continue to fall further, even based on fundamentals. The so-called silver gurus of this world say the market is manipulated and silver prices deliberately held down. Are they correct? It's possible, but on basic fundamentals alone, the silver price should fall further, regardless of manipulation. Why do we say this? Well, let's examine the evidence. 54% of silver demand is that received by industry. The actual physical quantity of silver demanded by industry over the past 4 years to 2013 has gone down, and over the past 10 years has remained at best static. Yes, despite the rumours, it has reduced from 643 million ounces to 546 million ounces. Once the 2014 figures are announced, we are likely to see this trend having continued. As far as 2015 is concerned, with the world's economies in their current state of deflation and recession, it's even likely to get worse. Yes, it is true that there are more uses for silver than ever before, but don't listen to the so-called experts who tell you that regardless of the price of silver, industry will still buy the same silver quantity for that fridge, freezer or computer. Look what's happened to the solar industry. Only a few years ago, solar panels were going to use so much silver it would cause supply shortages. What actually happened? The industry found a way of using less silver in their panels. While silver is perhaps the most conductive and reflective precious metal, substitutes do exist when price becomes a factor, even though quality may admittedly be affected. For we live in a throwaway society where goods have built-in obsolescence. I pity those in the USA taking out 7-year car loans, for example. Why? Because the cars won't last that long. You will be selling them at a major discount in 3 to 4 years and still have a hefty loan balance to cover. So with the economies of the world suffering deflation and/or recession, with declining economic activity, now including the Far East, the industrial demand for silver at best will remain flat, or at worst will reduce for the next couple of years. If it were not for people like you who are listening to this message, who went out and bought physical silver coins and bars, providing a 75% increase in purchases, then silver will have lost its luster some time ago. Therefore, do not listen to those so-called silver gurus who perhaps made 1 or 2 correct price predictions since 2008 and the rest all being wrong. You know who they are. Those who say, buy silver now while it's cheap, average down if you bought when it was high, who incidentally recommended that you should buy when it was high. For demand is going to rise exponentially and supply is falling. Many of them have a vested interest in telling you this, as some have their own precious metal businesses, their own silver investments, or a latest book to promote. So let's dispel one of the myths they engineer. Silver mine supply is not declining. I repeat, silver mine supply is not declining. According to the Silver Institute, the supply of silver rose by over 3% in 2013 and by over 30% since 2004. Last year's supply, according to our sources, show a similar picture. It's not going to run out any time soon. We also hear that mines are going to close. Yes, some will, as do other businesses in a world economy. Those mines which began production anticipating $26 ounce silver and higher, whose costs are in the $20+ range per ounce, will survive for a time, but will eventually close or be bought out by a more efficient operator. But you only have to listen to the Kitco and Cambridge House interviews to see that a number of pure silver mine owners have managed to reduce their costs to around $16 an ounce, which also includes exploration costs, by the way. I will come back to this later. And they are few in number and represent a small proportion of the silver market. Other mines, which produce silver as a byproduct, which represents almost 70% of the silver mined, have all-in costs of between $9 to $15. So it's quite possible to see sub-$15 silver prices and the industry still continue. Now, I want to come back to this all-in cost, which also includes exploration charges. It is true that at sub-$15 silver, many companies will hold back on exploration and cut back unprofitable seams. This means they can still function and pay their bills. It does not bode well for the future, admittedly, that is 10 years' time, but for the next couple of years, its impact will not be reflected in the price. Please understand this. It takes on average 10 years from exploration find to full mine production. So the time to be bullish about silver is not today, but in a few years' time, when those explorations, which have not occurred, result in a possible shortage. However, with silver ranging from $20 to $35 during 2010 to 2013, a number of exploration projects did occur. Deposits were found and developments began. Now, some analysts are predicting 2015 or 2016 to be the year for peak silver. Really? Okay, let's suppose they're right for a moment. This means 2015-16 will see a further rise in the supply of silver. Peak meaning highest point. So with supply reaching a peak and demand remaining flat or falling, what do you really think the price is going to do? Now, what about investor demand? So many naysayers are telling us the mints are running out of silver. Well, not strictly true. Each year, the mints have to assess their demand for silver and place their orders accordingly. In simple terms, the process of making silver coins is as follows. 99.99% pure silver is melted at a temperature of around 2000 degrees Fahrenheit. It is then extruded, in other words, made into long, thin strips. 1 ounce, for example, blanks are then cut out of the strips. They are then burnished, which is a polishing process. And finally, the blanks are pressed or struck from a steel die with the appropriate design etched into it. So if the demand for such coins exceed what the mint predicted, then yes, it does temporarily run out of silver. But there is plenty of supply to call upon to correct this, which is why previous delays or rationing have only lasted a few weeks, at most. So don't listen to the scared stories. It's not that silver has run out, it's that the mints have underestimated the demand for a particular coin or bar. So a rise in the demand for coins and bars from 139 million ounces in 2012 to 245 million ounces in 2013 did catch the mints by surprise. but supply was shortly reinstated, and you can buy today as many Philharmonics or Canadian maples as you wish. Finally, I want to address black swan events. Yes, if the world currencies collapsed tomorrow, then we shall see silver prices rise. Not because one immediately thinks of buying silver, but because there will be a flight to gold, and silver prices have a close, but not identical, direction correlation to gold. So it will move up in sympathy, but not because of its inherent demand. This only kicks in when gold prices go parabolic, and those who cannot afford it flee to silver as a substitute. So let me summarize. We're not running out of silver, at least not for the foreseeable future. Prices will fall further just based on supply and demand, regardless of any manipulation that does or does not exist. If it does occur, then prices will definitely fall even further. Miners can still supply silver under $15 per ounce, and only a few mines will close. Exploration will be affected, but this will impact on prices in around 5 years' time, and seriously impact in 10 years, not today. Industrial demand for silver has slowed and declined in real ounce terms, and this will continue until the economies of the world improve. The only reason India purchased so much silver in 2014 and now in 2015 was because of the tax levies placed on gold. Just imagine what would have happened to the price if the demand from India was not there. So supply up and nearly peaking, demand down, and if it were not for private investors being influenced to buy silver coins and bars, demand would be considerably down. We see prices falling further. By the way, it has recently been brought to our attention that bullion dealers are having orders resold back to them before delivery or shortly after receipt of their orders. This does not bode well for investor demand and will further influence the price of silver downwards. Thank you for listening. We appreciate those silver bulls amongst you who may not like this message. And frankly, we do not particularly care if you like or agree with it. But we do care that you have an opinion. So give us a thumbs up or down, but at least respond and subscribe for further messages. Finally, a disclaimer. Silver Illuminati owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are therefore not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.